Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Friday. Happy Friday, everybody. It is May. Excuse me, I already missing months here. May 3rd here, and we got the big day today. We got the jobs data today, so let's jump right into it. So today we got the Bureau of Labor Statistics releasing their non-farm payrolls. I can see the previous month was reported at 189,000. Forecast for this month was 213,000, and it well exceeded that 263,000. So this came in a nice, came in pretty nicely. As you can see here, unemployment rate that even dropped. We went from 3.8 in March. The forecast was calling for 3.7, and dipped even further down to 3.6. This is the lowest reading we've had since 1969. This is how long since we've had there. And 1969, if you recall, we had the Vietnam War. And right now, we're not in any uh, declared war state. So at least that way we can say how good the economy is moving so far. Average hourly earnings here for the month of April. March went up 0.2%. Forecast across the board, it went in as forecast. It continued that same trend at 0.2%. Our average hourly earnings. And the year over year remained at the same at 3.2%. Then we get in the service industry section. So we get the March at 52.9. Anything above 50 is considered optimism in this, and it went up slightly to 53. However, on the ISM non-manufacturing, also services index, we went from 56.1. Forecast was calling for 57.5, going upwards, and instead it went downwards. So ISM kind of threw a loop again. So manufacturing did that this week, as well as the services went opposite of what the market went. So it'll be interesting to see, you know, what transpires on those two industries. Let's try and jump ahead here. Stock market's up. It's taking its direction mostly from the jobs numbers. They really like those jobs numbers. Kind of gives them reassures them the economy is still on pretty strong footing. We got tame inflation. We got jobs. People are making more money, spending more money. Things are looking up and up. We still get Q1 corporate earnings reports, but this is kind of taking the center stage of the jobs reports today. And that's what's kind of moving the stock market. Oops, sorry about that. Bond market, we're up 9 basis points. So we're kind of on the verge of maybe getting some price improvement. We've been kind of going slightly up or down and kind of a sideways pattern. And yes, I believe we went upwards a little bit. So we're kind of on the verge of maybe having a slight improvement. So if this goes up a little bit further this morning, we may see some price improvements today. So let's fingers crossed we might get some improvement in our interest rates. But right now, I would say it's unchanged. But some lenders might be inclined to go ahead and give a price improvement on here. All right, and here's the 10 year. Still kind of in the same range. It's still at the 2.52, so it's not really doing a whole lot. It didn't drop down, so even though we're up, the mortgage-backed securities is up a bit, but it's kind of in that same range. All right, folks, you guys have a great weekend. Enjoy the rest of your day. Thanks so much for watching. And right now, again, rates are basically unchanged, or some lenders may be inclined to go ahead and reprice. It depends when they came out with rates and where the market were at that time on there. So we've had some ups and downs here this week, mostly in sideways pattern, but it would be a very slight change if there is a slight improvement. All right, you guys have, again, enjoy your weekend. Thanks so much for watching, and we'll catch you guys next week. Bye-bye.